Good morning. It's Market Day Report. We're so glad you're with us to start the week. Okay, World Ag Supply Demand Estimate, or WASDE report, that's set to come out at 12 o'clock Eastern, 11 o'clock Central. We've got that. We've got a flash sale of soybeans to Mexico. That's new crop and old crop. So we've got a lot to talk about, including the overnight trade for corn. Let's go there first, as the corn market in higher territory in the overnight session. 446 on the new crop, up 4. Soybean trade in the overnight session. First off, we're coming into a bean market today where the new crop November has settled higher 3 consecutive sessions. Overnight, 19 3/4 higher, 10.50 1/4. Now to the wheat market. It's been lower for 3 consecutive sessions. In the overnight action, 521.5, down 1 tick. For hard red, it was also 518 1/4, but it moved up 3/4 of a penny. And then spring wheat, this is December, 620.5, off 3 1/4. Cotton market, before we get to Brian Hoops, December up 133 points, settling overnight at 70 cents. Midwest Market Solutions, it's Brian Hoops. All right, Brian, lots to talk about here. How do you stay focused?
Good morning, Tony. Yeah, there's plenty of things to talk about this morning, and really the last thing we probably want to talk about is the WASDE report at 11 o'clock. It may not have much impact or bearing on today's trade, as we are going to be focused on the U.S. and China reaching at least a temporary pause in their tariffs. The U.S. has agreed to lower their tariffs from 145% down to 30%. China is lowering their tariff rate from 125 down to 10% for 90 days. And this is in an effort to reach a broader trade agreement. You know, it was believed that China was going to be the last country to reach an agreement, and now it appears that they may be one of the first ones. And if this happens, they're kind of the big player here. It may be just a real domino effect for other countries to quickly get in line and reach an agreement with the United States as well. So this is a really major move here from the United States, and it's one of many that President Trump was able to pull off this weekend. This is huge ramifications. You can see the stock market, equity markets are sharply higher this morning. The U.S. dollar is sharply higher. Gold and silver sharply lower. The grains have had a pretty big rebound in the morning hours. In fact, we gapped higher in the S&Ps, we gapped higher in the soybeans. The soybeans did come back and fill their gap and then closed sharply higher. And it's really thought that the soybean market is the one that will benefit the most from reaching a trade agreement, because China has not bought any soybeans from the United States, and an agreement is expected that they will be forced into buying more products from the U.S. than what they had in the past.
Yeah, we're just wrapping up here with the precious metals. Gold 32.30 down 105, and even the silver market in the red as well. All right, Brian, let's hang on. We'll come back. We've got plenty to talk about on the protein side as well. Market Day Report continues in a moment. How about that cash last week in the South? 218 to 220, 225 to 228 in the North. And then we really rang the bell on the dress, 355 to 360. So that's where we start the week. Not to mention we have a WASDE report that comes out later today. That might have some impact. I'm not sure, though. Seems like cash is going to be driving the markets the rest of this week. How about live cattle futures on Friday? We don't trade these in the overnight session, but June, 214.67 up 42, 42 lower on the August at 209.57. For the feeders were up 50 on the front month at 297.97. August settles above $300, though it lost 95 on the session. Hog trade, June, up 40, 97.57. Let's bring back in Brian Hoops, Midwest Market Solutions. Is it cash that drives the bus this week?
Maybe by the end of the week, but not this morning. We have bigger news to talk about than the cash markets, and it's the fact that the southern border is closed once again to imports of cattle. So that decreases our supply of feeder calves coming into the country or live cattle coming in the country. And when we already are very tight on supplies, this makes that situation even tighter. And would expect to see a big rally led by feeder cattle today. Right now, the bid looks to be about 300 points higher, and we may double that at some point during the session today. The last time we shut the border down, it was closed at least temporarily. We had a huge rally in the markets, and I think we're kind of looking at the same thing again. As I said, supplies are already tight. This constricts the supply chain even further. And so we have decent demand. We can see that by the cash trade that you were talking about, stronger this week. No doubt it'll be stronger again this week with futures leading the charge higher, and feedlots really feeling the upper hand that they want to hold out for this inventory because you just can't replace them. It's very expensive, and there just isn't that supply out there to replace these fat cattle with. So they're going to hold on, even feed them out a little bit longer, and we'll see what happens today. But I would suspect we're going to see big gains at least early in the morning session.
Yeah, and again, just running through some of these charts, look at how far we've come since April the 14th on that August feeder cattle contract, which, again, Brian, we sat back and wondered, will we push through that $300 range? And then if we do, is there room to stay there? And I think what you're saying is yes.
I'd say absolutely. With this news like this, and it depends on how long this border stays closed. But as we know right now, absolutely, we've got plenty of ammunition to continue to push higher here.
Okay, I want to bring up one more before we go, and that's the energy markets. This is a market that's been up 10.4% over the past 5 sessions. But you look at year to date, it's down 11.4%. Crude oil, 63.18 up 216. What's happening there?
Again, this is in reaction to the tariffs being lowered against China. They are a buyer of U.S. crude oil products, and this trade agreement makes the market believe that they will buy even more products in the future. So demand expected to increase. Same time, we do have a lot of supply around the world. OPEC is increasing supply and increasing their production. The U.S. wants to increase production. This may be a temporary rally in that crude oil market, but it sure looks good here, at least on the front end. But in the longer term, I think our supply is probably going to overtake our demand that we have. But here in the near term, anyway, it's nice to see that market rally. And, we have the dollar trading higher as well. That will eventually slow down some of our exports.
All right, Brian Hoops, Midwest Market Solutions. Thanks for the insight. We'll see you on Wednesday.